So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again at Option Alpha, and welcome back to The Daily Call. Today I want to go through the top 3 obstacles I think many options traders encounter. And the reason I use the word obstacles to start this off is because I think they are things that everybody is going to run into, but they are things that you can get over or get around. So they're not going to hurt you, they're not going to derail your potential success, but they are going to be things that you have to push through, or you have to figure out a way around them through consistency, persistence, patience. One of those you're going to have to use as a means to push through this obstacle. So these come up time and time again, not only in our membership community, in the forums, but also through coaching that I've done before in the past, and just through my own experience of knowing, how to trade and having been through many market cycles over the last 10 plus years. So the first one for sure is trade count. I think this is an easy hurdle to get over because it's just a matter of time before you have an opportunity to enter more positions. But oftentimes the first obstacle that people run into is just simply not getting on enough trades over time. So they might execute 5 trades or 10 trades, and the numbers don't shake out the way they assume they were. And so they throw their hands up and they say, that's it, I'm done, I'm giving up. But the reality is that you just didn't trade enough to let the probabilities work themselves out. Obstacle number 2 is 100% position size. So this to me is a huge deterrent to your success. And it's the unwillingness of somebody to recognize that position sizing needs to be a top priority in their account. So once you get into a rhythm of making a bunch of trades, now you're starting to find out that some trades are not going to go the way that you thought, even though the setup was air finger quote perfect, or the market situation was perfect, the trade just didn't go the direction you thought. And position sizing is something that should be your safety net. You should keep your position sizing insanely small so that you can leave room for capital to expand, and so that 1 or 2 or 3 contracts or trades do not blow you up if they go sideways. Number 3 of our top 3 obstacles is sequencing risk. So once you get into a rhythm of actually making trades, and now you have your position size in check and you're making small trades and you're making them often, the number one thing that you're going to run into is now sequencing risk. And sequencing risk is just this random sequence of bad outcomes that might start to affect your portfolio. This can happen at any point. And this to me is one of the greatest risks that many people face when trading, is the risk that in a high probability system, they randomly run into a sequence of bad trades. This could be a string of 10 or 15 or 20 trades that just do not go their way. And again, it's not that the system is broken or the model is, not working, or it's strategy that doesn't generate a positive expected outcome. It's just that you ran into a bad string of trades randomly in this sequencing model. And you ask any real trader, anybody who's been around for a really long time, very high level, successful, professional money managers and traders, and they'll tell you the same thing, that one of the biggest obstacles you can face is just getting through a sequence of bad trades. So I often relate this to flipping a coin, where if you're flipping a coin, you're going to be, over a long period of time, 50% heads, 50% tails. That's the expected outcome. But you might run into a sequence where you flip the coin 20 times in a row and they all land on tails. Now, does this mean that the coin is broken, that the coin is a fraud and it's a bad coin? No, it just means that you just randomly, however the likelihood is of that happening, flip the coin 20 times in a row and landed on tails. But if you keep flipping the coin, the probabilities and the numbers will shake out to where they should be, which is about 50% heads, about 50% tails. So hopefully this helps out. As always, if you have any questions, let me know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.